Hello guys and welcome to another video. Before we get started with it, I want to say the next. I am not a financial planner nor a financial advisor. I am not FCA approved. I'm not approved by any institution that allows me to give financial nor investment advices. Nothing mentioned in this video should be considered investment advice or guidance. Everything shown, talked, and explained is for pure and only educational purposes. The risk is on your own hands. Enjoy. Hello everyone and welcome to another video. Today we'll be talking about basically about today's price action, a little bit of a few concepts or patterns that happened today, Monday, August 2nd. And yeah, first of all, what we see is that since Friday we were basically reacted to somewhat of a 1 hour order block that came from mitigation and caused that move that basically flipped from demand to supply, sorry. And here this was our confirmed low. That price basically broke, and yeah, we were basically in a bearish market on the 1 hour time frame. On the 4 hour we were probably bullish, but yeah, I wasn't really looking at the 4 hour. I basically decided to draw this area on the 1 hour, which is not that crazy, that good per se, but basically, well, it's actually that candle, right? Which is the last candle before the major push. At the same time, we could have used this, right? Which is a little bit better, maybe. Yeah, I decided to draw that one, which it caused a little bit of reactions. But if we go into the 1 minute inside of this area, we actually don't have much price action to actually go for. Okay, I had to make a little pause as my volume was a little bit low. So yeah, so that was my 1 hour order block that I was basically paying attention to. And I was expecting sells due to the fact that, well, through the past week we were basically very bullish, right? And we basically came from reacting to this 1 hour order block. So I thought and I still think that we had some really good opportunities to just go lower. Maybe we'll react to this daily order block that we have here. At the same time, if you've seen or you are familiar with ICT market maker buy model and sell model, you'll see that there's a pretty good pattern basically all around here, right? So 4 up and we expect 3 down, right? So push down, a block, push down, another one, push down, another one, and from there, well, it can continue to go lower or it can continue to go higher. So yeah, something like that. I'm not that familiar with the pattern, but if you've seen the recent videos from ICT, you'll see them talking about basically this price action, the price action of last week. I did lift the videos on Telegram and stuff. So okay, so we get to the price action. I got up at 7 a.m. today, which was literally 1 minute, a few minutes before basically this trade happened, which was a pretty clean trade, not gonna lie. And what we have is the next. We were basically pushing higher, right? I do not know if we actually reacted. Now I actually didn't react to anything on this high. But that high basically took, well, this liquidity was taken by this high, and then this liquidity was taken by this high, right? We then basically flipped, and my confirmed high was this, my confirmed low was this. So all of this was basically substructure or substructure, sub price action. Basically, this was my confirmed high, this was my confirmed low. Everything within it was substructure breaks and basically that. So when I'm inside of that, I basically expect price to I've said basically so many times, I expect price to just continue with this trend, right? So if the confirmed high and confirmed low is a strong push down, I expect price to, in the substructure, just basically be there, right, in the substructure, to then continue to go with the trend of the major structure, right? So that was kind of what I was expecting. Of course, when I got up, as you can see, this as soon as basically at 7:05, I think, is when I actually had turned on my computer and everything. And well, this was a pretty clean trade. I'm not sure if I would have actually taken it, as well I wasn't in the markets at this point. But yeah, pretty good trade. So we have price created equal highs, which is not that good in my opinion. At that point, I might would have expected something like this to work out, or maybe even the extreme, right, as we have liquidity. We then break this structure, which is substructure, because the confirmed high is this and the confirmed low is this inside of the substructure, right? So anything within is just substructure, as simple as that. And when we break this, it's not even the break of a confirmed substructure structure, right? It's a little bit confusing, but basically it is not that of an important break. But when you have two of these, well, that's a little bit better, you know. And then we even create liquidity with that high, so that's a pretty good confluence. And after that, well, we do see a pretty strong push down. We do react to somewhat of a bullish area, but this reaction comes from nothing, so this counts more as liquidity than anything else. So I am expecting price to at least react to this, so at least go down to this area, or maybe even lower, such as that area. As I always said, I usually go to the 5R. Well, most of the times I go for the 5R. Recently, I've never gone for 10R. But as an example, in this case, we can easily aim for the low of this low, right, at the very least, as we expect price to actually take that low. And at the same time, if we check to the left, we don't have anything to react to until this area, right? And that even is a little bit of a risky, not risky, but an area that is kind of not as important as an example as this one, or maybe even the extreme, right? So I would have expected the price to react to this. It was very weird if we decided to react to this whole thing, right? So yeah, I was either expecting at the very least for it to react to this, or to just go through it, right? But I was not expecting anything to happen before this area, right? So push down at least all the way down to this. Sort of a range, which is a range or pause before a major break, which is in this case a flip. And price, as you can see, if we would have aimed for the 1 to a 10, that's the 1 to a 10. As you can see, it's right on this area. So that actually works out pretty well. So a 1 to 10 would have been pretty possible in this case. And yeah, that's pretty much it. So what we have next is, let me do this because I don't know why it lags. Okay. So we then have this price action, which basically is a range, right? A range that has liquidity above, liquidity below. And what you usually expect is for price to go one way, to then go to the another way, and then continue to the first direction, right? So it takes liquidity. The first side that it takes liquidity from, it's usually the side that it goes to, right? But if it doesn't take the liquidity above, in this case, for me, it's not that valid of a range, right? So it took liquidity down. I was expecting price to take the liquidity above, and then continue to go lower, right? Which is the reason why I had an entry in this range, right? As you can see, price ended up basically creating somewhat of a smaller range in here before the break, right? And that's what price basically came back up to react to. I did spot the range, and I thought it could have been a risky but a good trade to take. But I was pretty focused on this one and this liquidity, so I said, you know what, let's just go for that one. Basically ended up missing out on this one. To be honest, a bad psychology in this trade really played a big part of me missing out on this trade, right? Because I do believe that we have the confluences. I do believe that we have counter confluences, right? And but yeah, it's a trade that I've taken in some other occasions, and as it was my first day of the verification phase and everything, I think that psychology played a big part in basically me missing out on this trade. So what we have next is a pretty strong push up, right? That takes liquidity, flips the market from supply to demand. And if we check to the left, we have a pretty important area that basically took liquidity, comes from mitigation, right? So it's pretty strong move. We do have liquidity there, although it was taken by this. So this area, in my opinion, has a little bit more strength than that one, right? And this one. But yeah, we basically do have still some reasons to go lower, right? So we have this reaction, and what you can actually see here is that, well, we create somewhat of a pause and everything. And what happens is that we do leave liquidity, right? So that's reason for price to continue to go lower, or for price to basically take that liquidity and then go higher, right? At the very least, that's what we usually expect. What happens also is the next. Price basically creates this low, right? This are confirmed low, this are confirmed high, right? This is our structure, this is substructure as an example. Takes the liquidity and flips again, right? So for me, when price does a move like this, where it takes liquidity from one side and then goes to the other, causing breaks of structure or a flip in supply and demand, it's as if price basically did that after tapping an important area, right? So as an example, if we had something like this, let's see if I can draw it correctly. Okay, so we have something like this. And we react to this, and okay, yeah. Let's say, oh, kind of fucked up here. Okay, let's just do it like this, like that. Okay, something like this. I think this will be a little bit understandable. So let's say we have this type of move, right? Price came back to an important area and basically caused a reaction. As you know, I usually wait for a flip and then a break, right? That's my usual strategy. That's what I usually expect or wait for before trading or taking a trade, right? So as an example here, we only have a flip, right? Well, we actually don't have a flip. Let's suppose we have something like this here, right? And we caused a flip from this point, right? We have a flip from supply to demand, right? And then price taps an area and flips again, right? I should actually wait for the next break and basically go for an entry here as an example, right? But as we come from basically mitigating an area, right? As we come from mitigating this area, then for me, a flip is just more than enough, right? For me to take a trade there. So the exact same thing happens when price basically takes liquidity. So let's suppose we have a structure like this, where we have somewhat of equal highs there. The price basically continues to pull slower, and then we have something like this, takes liquidity, flips, comes back and mitigates the cost to the flip, okay? So we had this liquidity, right? This liquidity here, that price basically pushed up, took, and then flipped, right? We have a flip to demand here, and now we have a flip to supply here, right? So for me, the cost to that flip, whether it is a pause here or a pause here, or just the extreme, maybe we don't really have much else to choose from. Basically, that's a pretty good entry, right? So at that point, for me, that was already a pretty good trade, right? So we basically flip. We flip after taking liquidity, right? And with a very strong momentum, very strong move, right? And price then tries to come back into this area. I placed a trade here on the 55 hour correctly, and price, as you can see, didn't even come back to tap the open of that. Okay, sorry, I had to make a little pause. So it didn't even come back to basically mitigate the area itself. So that was an unmitigated area that we could consider for later, but yeah, it wasn't really that worth. So after that, after basically this break, I deleted the order, and what I should have done here is consider this as my next opportunity, right? Which is basically a break, so just somewhat of a continuation trade, right? So we get an entry here, then we get another break, comes back for the cause, we get another break, comes back for the cause, we get another break, comes back for the cause, we get another break here, comes back for the pause, which is for the cause, which is a pause, right? And another take profit. So just in this structure, as simple as that, just going on this basically continuation type of trades, when you have a break of structure and you basically just go for the cause of set break, right? It's not very usual to see something like this that simple, where you see reaction after reaction after reaction after reaction, whether it is on a pause, whether it is on the extreme order block, wherever it is. It's not that common to see it work out this well, right? But yeah, basically, when I missed out on the first trade, I didn't like the fact that it basically didn't push away that much. So as you can see, it ended up working out. Have another break. Didn't like it. Didn't want to trade at this point anymore because I had missed. Well, this is an opportunity that there was no way for me to take. This trade was a little bit of a bad psychology along with a little bit of a bad analysis. Here, I just missed out on it, which basically price just didn't come back to mitigate me or to trigger me in. And this one, it was just bad psychology as an example, because I did realize that this was a good opportunity to take, right, the first one, and I just didn't go for it. It happens to me when I basically, let's say early in the morning, I miss out on maybe 2, 3 trades, or maybe just one that worked out amazingly. It starts to um, affect me psychologically, and I basically end up missing out on a lot of opportunities that happen later on because, well, I say, so if I had this trade, this take profit, right, I would have a little bit of a margin, right, to take the trade now. Because if I take a loss, well, I'm still in profits, right? So it's a bad mentality, right? Because, well, let's say I miss out on a trade because it happens to the timing, or it happens literally because I just got out of my computer for maybe 10 minutes and an entry actually developed. As an example, this entry, this range we're talking about 1, 2, 3, 4, 5, 6, 7 candles to create the range and make the break of structure happen, and then 1, 2 candles to basically um, trigger me in, right? So we're talking about 10 minutes, less than 10 minutes to actually create an entry. So that can happen. And for me, sometimes it affects me a lot. And in other cases, well, I said, okay, so I missed out on a couple of opportunities, nothing bad there. Let's just continue to look for opportunities. And what can easily happen to me is that, well, sometimes you'll get a structure like this where you had maybe 3 or 4 trades in a row that worked out amazingly, and simple as it can be. And then you say, okay, let's just go and take this one, right? Which is the continuation to the trades that we're taking. We have liquidity, we have good confluences, and that trade just doesn't work out, and that basically affects you even more. As an example, in this case, I did want to take this even when we had liquidity, but I said, you know what, let's just not trade today. We're talking about this was close to 10 a.m. And let's just spectate the market. Let's see what happens and everything. At this point, I had already missed out on this pause because it is a pretty clean pause just before the major, well, not major break, but a break of structure, right? And as you can see, it works out amazingly. It does get only to the 50%. No, sorry. If we would have gone for the 25, we would have been missed on the take profit, right? As if we would have gone for the 50%, we would have managed to get a pretty good take profit, right? That's what I was trying to say. And yeah, pretty much this trade that in my opinion had a lot more confluences than all of these. As you can see, it didn't work out, right? Oh, and something that I forgot to say here, have a drawing, right? JS, which is Judas swing, right? I haven't asked a couple of times if I use Judas swing and stuff like that, and I don't. But as an example, this is a pretty clean and simple case where a Judas swing is a concept from ICT, which is basically just a move against the trend that takes liquidity and then continues with the current trend, right? So the current trend was bearish. Price made a very strong push up, triggering, well, buyers buy stops to be triggered here, stop losses from the sellers to be triggered here, and then basically buy limits or buy stops, well, buy limits here and basically sell stops here, right? And in this move, the algorithm, the market maker, or however you want to call it, basically takes the liquidity from both sides. No one is supposed to be in the market unless, as an example, you took a sell here as you recognize this as resistance, and your stop loss, let's say, was here, right? To have a pretty large stop loss, which in this case you would have been, basically you would have done great. But retail logic says you got a resistance, you got a support, place your entry on the beginning of the resistance, the open of the resistance or support, and the stop loss just above, and price comes back up, takes that liquidity and goes lower, right? So you have a low, you say, okay, let's place a sell stop, right? What does price do? Triggers the sell stop, comes back up, your stop loss maybe here, maybe you can be a little bit more cautious, put it here, maybe you go all the way back up, which is crazy. I mean, from this perspective, right, we're talking about maybe what, let me actually check if I can. We're talking about 11 pips, which is actually not a lot if we go to the 1 hour time frame, but in the 1 minute time frame, this is just crazy. 11 pips. For example, this trade is 7.5 pips. This one is 8.5. This one is 10 pips. So we're talking about 11 pips could actually be more like a target than a stop loss, right? So I don't think anyone would actually place the stop losses here with their entries here to just go lower, right? So price basically triggers the sell stops, do work out for a little bit. They then come back. They trigger the sell limits of the breakout and resistance traders, right? That expect price to basically break out structure, come back, retest, and they continue to go lower, which is actually something that I traded it for a bit. And their stop loss is just above, and price takes all of them out, right? And yeah, pretty much that's the Judas swing. Just a movement against the trend that takes liquidity, takes, in this case, the sellers out, triggers the buyers in, and then just continues to go in the first direction. It's pretty much a Judas swing. It's not something that I quite use, because as an example, if I would have used it, I could have set an order here with maybe a stop loss somewhere around here, right? And we'll target, I don't know, could have targeted the order block, which I think is this one, yeah. It's an example, would have been a good trade, I guess. But yeah, it's not quite something that I use. We could have traded this as an example, as we do have an order block here, which the 50% is mitigated, and we have a lot of liquidity above it, right? Which price ended up working out with. But yeah, at that point I was not quite interested in a trade there, as we were reacting to a pretty strong area in my opinion. So I was just waiting for something a little bit clearer. So yeah, where were we? So yeah, at this point, I was no longer really interested in trading, as I had missed out on a lot of opportunities and my psychology wasn't at best. I could have been basically revenge trading and stuff like that, and it's not quite something that I like doing or anything like that, right? So basically, we then we tapped into the order block. I did see that we took liquidity from here and there, right? So that was a pretty good move. We then flipped, right? We had taken liquidity from here, right? Had created somewhat of a support here, had a lot of wicks. So I took liquidity and everything, so it was a good confluence. And as you can see, we have the flip right here. We have a couple of major breaks. And as you can see, again, this move could have been considered a Judas swing, as it takes basically all of this liquidity except for this major area, which is kind of what it reacts to, and basically then just continues to go lower, but it doesn't actually break this major thing that we have here. Since I did think about taking a trade here, but if I would have done that, I would have gone for the 50% of this whole range, as it is a pretty large area. And yeah, that's quite what I was trying to get in with. Then as you can see, this is my structure that I want to break if I want to go for a basically CE in this case, because this is the risk entry, this will be the confirmation entry, right? We first see a change in the order flow, right? A change in the order flow means this. For example, let's say you are doing this, you're creating lower lows and lower highs. This is a very order flow, and when you change that, you basically break the confirmed high here, right? You changed and you create a higher high, where you expect this price to create a higher low, then a higher high, then higher low, then higher high. So the expected order flow here on this side is bearish, right? And the expected order flow on this side is bullish, right? So yeah. Here, as you can see, we come from creating lower lows, lower highs, lower lows, and here within the substructure, we're creating a high, a low, a higher high, a higher low. So a change in order flow sometimes could be a good confluence, or not confluence, sorry, but a good confirmation to take a risk entry or something like that. So you can see it does react to this, and you see a change in order flow. So that's something that we could have actually traded just like that. So an entry basically on this order block, right, which would have been a profitable trade in this case. Or you could have gone for the trade that basically happens after the flip. And as an example, here we have the stairs pattern, right, where we flip, and all of this structure, what you expect is, as an example, we have a pause that causes the flip to work out, right? In this case, it's not that bad. If you go for this and your stop loss is below the structure, then that does work out. But as you can see, the pause does get taken out. So that basically acted as liquidity for this order block that we have here, and basically price continues to go higher, right? So this was a pretty good trade. Could have aimed for maybe a higher area, or you could have gone for this, or you could have gone for the 1 to 5. For example, I thought that this was still a pretty strong area. I might would have gone for just this equal highs that we have here, right? All of this liquidity. So you can see it does cause a good and strong reaction at first. It does take the high by very little, but it does. And then it fell down, took the liquidity from downside, went up, took the liquidity from the upside, and basically continued to go lower. And this is kind of a little bit like what I said earlier, that it takes the liquidity from the downside first, then takes the liquidity from the upside, and then it continues with the first direction, right? Although in this case, as an example, we didn't have that much liquidity. It's not that we were within a range or anything like that, so it's not that big of a confluence. But yeah, it's pretty much very similar to what I said. So you can see this move kind of reacted to this small pause that we have here, which we could say that we have equal highs there, right, on these two candles. So that will be liquidity for something above that, right? In this case, we have this pause. So we could say that this is a pause before the move that created liquidity and then causes the major break, because it's not a break. And yeah, this would have been liquidity instead of considering it as a pause, and price came back up, mitigated the pause, which is to cause this major break and then continue to go lower. So as an example of this is something that you can spot, and it's just a little bit hard, right? Because as an example, I myself would not have considered this as a pause. It is a pause because, as you can see, price starts with a pretty strong push and then it moves very little to then continue to go strongly as it was. So it is a pause, but it's just, I don't know, it's not that good per se. So that's pretty much it. It's pretty much to this press action. I think there were a lot of opportunities. Sadly, I was not at my best today. I didn't take any trades at the end of the day. I was about to take this one, which would have been a loss. I was about to take this one, which would have been a take profit, but I was just a little bit too scared because I said it. So I missed out on this one. At this point, I felt like I couldn't trade again because I felt like I was forcing the very trend to continue, right? The same happened with this one, the same with this one, the same with this one. So it's already a lot, right? At that point, I prefer to be maybe on the second, to be as far as the second in. As an example, this could have been a good trade. But to be on the third or the fourth or maybe even the fifth, for me, that would have been a lot. If price does pull away a lot and then comes back as an example for an area like this, and let's say it builds up a little bit more confluences such as equal highs or a range, right, that takes a liquidity above or takes a lower one than the above and then goes down. Something like that could have been a little bit better, and I would have definitely gone for something like this area. But as it didn't pull away that much, well, didn't make that much sense for me. So yeah. On the other side here, I didn't think about taking this one. I thought that in another occasion I might would have. At the same time, I thought that maybe I would have gone for something like this, right? So taking this as liquidity, right, for price to go lower, then continue to go higher, which I would have missed in this case. But yeah, that's pretty much it. That's pretty much all. Sadly, not a good day for me. I mean, I didn't take losses, which is good, but my psychology was really bad today. There was an amazing amount of opportunities that, I mean, if we count, I risk a 0.25% on each trade, right? Which is not a lot, but it gives me, with 5R, it gives me 1.25% profit, right? So with, let's say I took this one, and this one, I basically am, well, this one is actually 8.5R. I would have been maybe a 0.70% or something like that away from hitting the target on the verification phase. So that's something that you gotta look at it in both the positive and the negative way, of course, because you basically had the opportunity to take those, but you didn't. And what you can do in these cases is either cry about it, as I'm doing right now, or you can also um, just take advantage of that situation that you're going through and realize what you did wrong. What was it that you did wrong? And as an example, what I decided to do through the morning while I was probably around these areas, right? So around these times, I basically decided to grab a notepad and started writing why am I missing out on these traits. And then basically, as an example, I said, so this is a good opportunity. It's pretty large. I will go for the 50. Did it work out? No, it didn't. If I would have had a good psychology, probably would have at least placed a trait. But I would have missed. But I think it's better to be or try to get into a trade and be missed than to not place a trade and not be triggered anyways, right? So yeah, that's pretty much it. It's something really really annoying to see the fact that you could have passed a verification phase in just one day. We're talking about 3 hours, less than 3 hours, because we get up at 7 a.m. just here. And let's say you took all this for, it took all the way, well, sorry, this is the take profit. It took, well, 2 hours and 5 minutes to get to target without counting this one because, well, it happened as soon as yeah, as soon as we got up, so it's pretty hard to actually take that. But that's okay, it's stuff that happens. It's something that has happened for me a lot because every time that I took a retry or the challenge, the first day, well, yeah, whatever it was the first day, I will basically miss out on all of these opportunities. And then, well, it got to a point where one day I would actually take a trade, so the challenge will actually begin. And at that point, I was just like, okay, so I gotta pass the challenge, so I gotta take trades. So yeah, that's why, as an example, psychology is key. That's the reason why I've always said that you could know all the concepts in the world, but if you don't really have a good psychology, there's not much that you will achieve because psychology will just fuck you up. As simple as that. It'll just not allow you to do the job as well the way that you're supposed to do it, right? Because today I knew the concepts, I had the tools to take at the very least half of these traits, and I just didn't, and that was pure psychology. So, example, well, there was a bad analysis in this one, right? And maybe another one here, because this trade, well, was a strong push, but I was expecting price to go above, take the liquidity, and then continue to fall. Which in this case, I would have expected price to actually continue to go lower on a little bit more of a long-term basis. But as an example, that was a little bit of a bad analysis. But overall, I was able to spot this trade, this one, and this one. And well, this one, it was a little bit hard because I was like between, as you know, with the stairs pattern, I would actually go for the extreme if I wanted to trade it. And in this case, that would have been missed. This is still a pretty good area as accounts for mitigation and everything. With a larger stop loss, maybe that could have worked out too, but yeah. And I had the tools, I had the knowledge, I had the concepts in my head. I know that I can do, I can do good enough to take opportunities like the ones that developed today. And psychology just kind of messed me up from the beginning of the day. And from that point, well, it was already a little bit hard for me to just pick up the pace and start to trade, right? Because, for example, when I have a take profit at the beginning of the day, I usually trade a lot. That's something that I've realized, because I take a take profit, so my confidence goes up a lot. And well, that could be good, and as it can be bad, because well, you could either take a lot of trades which end up being losses, or you could take a lot of good trades that which end up being profits, right? And yeah, that's pretty much it. That's why I've always said that psychology is one of the most important things. And at the same time, you have to know the concepts. You have to have the knowledge. You have to know what could happen, because we'll never 100% sure know. But yeah, that's pretty much all that I wanted to talk about today. Also, there's always room for improvement. There's no trader at any point of their lives that say, okay, I'm 100% good now. I know I can trade without having losses. That will never happen. And there's always room for improvement. And you can see it here. I mean, I try to do my best every day. I try to guide you, not guide you, but at least show you a little bit of concepts. Try to teach you things that I know, show you things that I know, show you things that I use on a daily basis. And that doesn't mean that I'm a good trader. That doesn't mean, well, not a, I mean, I believe that I am a good trader. But that doesn't mean that I'm a professional trader. I'm not a professional trader, it's just I currently do have a winning rate because I managed to pass the challenge. I do manage to stay in profits, right, one way or the other. So that's good, but there's always room for improvement. And it's simple, a good trader or a better trader than me could have got at the very least half of these opportunities. And to be honest, if I would have traded all of this, if I would have caught this one and this one, that's enough for me. At this point, after this take profit, I'm out of the market because two take profits in one day for me is amazingly enough. If I take a loss and then two take profits, then I might go and try to trade something else. But two take profits in a row for me is just a day done. To be honest, it could happen at 5 a.m. my time. It could happen at 11 a.m. my time. But at that point, I'm done because it's amazing to have a 2.50% profit in one day, right? But I still want to be able to say, okay, so I took this one, I took this one. I would have got this one if I wasn't already close to my daily daily target or daily rule, whatever it is you want to call it. I saw, spotted, analyzed. I did everything right with this one too. I would have taken it if I wasn't already within my daily target. Same with this one, same with this one, same with this one, and so on and so forth, right? Um, that's the point where I want to get to. I want to be able to, as an example, take this trade, take this one, and then, okay, I don't want to trade anymore because I'm on my daily target. But I did spot this one, I spotted this one, I spotted this one, and this one, and this one. I don't think I would have taken this one and this one, but I do know I would have taken this and this, right? That's the point where I want to get. I want to be able to spot the opportunities, every opportunity that happens in a day, not trade all of them because I know that I wouldn't even if I knew they were going to work out, of course I would, but even though some opportunities are good, I do know that I would have not traded every single trade that you see here, whether it's because of the daily target or whether it is because I just don't see the need to trade every move that happens, right? So taking the first, taking the second is pretty good. I think it's something that does work out for me. But taking all of it, just let's say you have taken 3 take profits in a row, to continue to trade after that point for me is just useless. I don't see the need to do that, right? Um, I don't know. I just have that mentality. I couldn't really say for sure if there's a reason to that or no or not. But yeah, that's pretty much it. So yeah, I think that's pretty much all. I'll be. I have a. Oh, simplicity. I wanted to talk about the simplicity of this. I mean, not trader. Trading is hard. It's not easy. It's not easy to learn. It's not easy to gain consistency. But the thing is that in my opinion, the technicals, I mean, they're not the easiest or the easiest, the most easy, not the easiest thing to learn. But as an example, it becomes sometimes it's just as simple as this, right? You have a flip, you have a break, one entry, another break, another entry, another break, another entry, another break, another entry, another break, another entry, right? Price can be simple, trading can be simple. It just depends on how you manage your trading strategy, how you manage your concepts, and how you do it mentally, because um, I've gotten days where I will just complex things out and I will miss out on good opportunities that were just as simple as it can get, to be honest. So simplicity is good, but you have to basically um, find an equilibrium point between complicity and um, complicity and simplicity. I think that's what I'm looking to say. I don't know. Just gonna stop talking now. So yeah, you just gotta find an equilibrium point. Yeah, right. Because you gotta have good concepts that allow you to have a good trading basis, right? And at the same time, you gotta keep it simple, just so you don't basically kill yourself while trying to understand the markets on a daily basis, right? Because at the end of the day, we're trying to do this consistently to live a life, live the trader lifestyle between quotation marks. Um, and for that, you need simplicity. You just can't be all day in front of the charts saying, okay, so this liquidity is this liquidity, this is an order block, this is that. Uh, Sometimes it's just gotta be as simple as this, right? Break, entry. And sometimes it won't be as easy as that. And you'll have to find, okay, so this liquidity, this is an area. As an example, this trade worked out for a little bit, right? With a good stop loss, you would have avoided that. And that's pretty much managing to take a trade like this, managing to take profit is already better than 99.9% of traders, right? So yeah, I'm just saying nonsense, I think. So I'm gonna cut the video here. I hope you enjoyed. I hope you take something away from it. Any doubts, any commentaries, anything, you can leave it on the YouTube commentary section or Instagram, Telegram. You can contact me with many ways. I'll be seeing you soon, guys.